Trading in the Zone by Mark Douglas. Masterclass summary: deep, clear, and trading mindset focused. Trading in the Zone is one of the most important trading psychology books ever written. Mark Douglas teaches you that consistent profits in trading don't come from strategies. They come from mastering your mind. This is the ultimate book on emotional control, belief systems, discipline, and becoming a probability thinker. 1. The real battle in trading is psychological. Mark Douglas opens the book with one of the most misunderstood truths in trading. Trading success has almost nothing to do with your strategy and almost everything to do with your mindset. Most traders think the problem is the wrong indicator, the wrong broker, the wrong entry, the wrong setup, the wrong time frame. But Douglas says the real problem is internal. Your mind is working against you in the market. The market doesn't make you lose money. Your beliefs, emotions, and mental habits do. What destroys traders is fear of losing, fear of missing out, FOMO, fear of being wrong, greed after a win, revenge trading after a loss, overconfidence after a good streak, self-doubt after a losing streak. The hardest part of trading is not finding setups. It's controlling what your mind does while you're in them. Mark Douglas' core message: you do not trade the markets, you trade your beliefs. Two traders can see the same chart and take opposite positions because they are not trading the same thing. One trader sees opportunity, another sees danger. Same chart, different mindset, different outcome. Douglas calls this the internal psychological battle. Why the psychological battle is so hard. Humans are wired for safety, certainty, comfort, predictability. But the market is dangerous, uncertain, uncomfortable, unpredictable. Your mind wants control, but the market gives you zero control. This causes emotional conflict that destroys discipline. Example: you place a trade. It moves slightly against you. Your brain: get out, protect yourself. But your trading plan says stay calm. This is the war. Your plan versus your emotions. The market is a mirror. IT exposes you. The market shows you your impatience, your lack of discipline, your emotional weakness, your unrealistic expectations, your ego, your fear. Trading exposes who you really are, not who you pretend to be. This is why Mark Douglas says, the market is neutral. You project meaning on it. There is no good trade or bad trade. There's only your reaction, your interpretation, your emotional conditioning. The goal of trading psychology. Douglas says your real goal is not to predict the market, but to train your mind to think in probabilities. You must learn to detach from each individual trade. Stop needing to be right. Stop fearing outcomes. Think like a casino, not a gambler. Trust your edge without emotional interference. When you stop letting emotions control your decisions, you finally become a consistently profitable trader. Summary of principle number 1. To become a successful trader, master your emotions, not the market. The battle is internal, not external. If you lose mentally, you will lose financially. Mark Douglas' message is simple but life-changing. Consistent trading is not about knowledge. It is about mastering the mental game. 1. The real battle in trading is psychological. Mark Douglas starts with a hard truth most traders never accept. The market isn't your enemy. Your mind is. Most traders believe they fail because they need a better strategy. They need more indicators. They need more news or signals. They need more predictions. But Douglas explains the opposite. You fail not because you don't know enough about the market. You fail because you don't know how to control your thoughts and emotions. Why the psychological battle is the real battlefield. Trading forces you into emotional extremes. You experience fear, greed, hope, frustration, overconfidence, self-doubt. Anywhere else in life, you don't face these emotions every 5 minutes. Trading exposes your inner weaknesses instantly. If you are impatient, greedy, scared of loss, addicted to excitement, afraid to miss out, impulsive, the market will reveal it immediately. Your mind creates illusions. You think you see a pattern. You think price should go up. You believe your analysis is correct. You expect the market to reward your effort. But the market is not a parent, a teacher, or a friend. It doesn't care about your feelings. The battle is against your internal conditioning. Most traders bring their normal life habits into trading. I worked hard, so I should win. I can't accept being wrong. Losses mean I failed. Being patient means waiting until I'm comfortable. These rules work in life, but they destroy you in trading. True trading success is becoming emotionally neutral. Douglas says the elite traders don't fear losing. Don't get excited when they win. Don't seek to be right. Don't take losses personally. Follow their plan like a machine. Because they know the psychological battle is not about predicting the market. It's about mastering yourself. 2. The market is neutral. You are not. Expanded breakdown. This is one of Mark Douglas' most important teachings. Most traders lose because they believe the market is unfair. The market is punishing them. Big players are hunting their stop loss. The market knows when they enter. But Douglas destroys this illusion immediately. The market has no agenda, no emotion, no memory, no revenge, no loyalty. The market is just a flow of prices, nothing more. So why does it feel like the market is against you? Because you project your emotions onto it. When you're scared, the market looks dangerous. Suddenly, every candle feels like a threat. When you're overconfident, the market looks easy. You start taking stupid risks. When you want revenge, the market owes you. And you force trades because you want to feel right. When you're impatient, the market is too slow. So you jump into low-quality setups. When you're hopeful, losses feel temporary. So you hold losers way too long. The market did nothing. Your mind added the meaning. Key lesson: you don't trade the market. You trade your beliefs about the market. 2 traders can look at the same chart. One sees danger. One sees opportunity. One sees confusion. One sees a perfect setup. The chart didn't change, the beliefs did. When you accept that the market is completely neutral, you stop taking losses personally. You stop forcing trades. You stop expecting certainty. You stop needing to be right. You trade based on probabilities. You flow with the market instead of fighting it. This is the moment your trading begins to transform. 3. Every trade is unique. From Trading in the Zone by Mark Douglas. Mark Douglas teaches one of the most counterintuitive truths in trading. No 2 trades are ever the same. Not in history. Not in the future. Not even if the chart looks identical. Here's what this actually means. 1. The market is made of endless variables. Even if a chart pattern looks identical to one you traded last month, the environment behind it is completely different. Different traders are participating. Different liquidity levels. Different macro news. Different institutional intentions. Different emotional states of the crowd. Different volatility conditions. This means your brain sees similarity. The market does not. That's why trying to compare today's trade with a past trade creates false expectations. 2. Expecting predictability creates emotional pain. Most traders lose because they believe, if this pattern worked last week, it should work again. But Douglas says this mindset is the root of frustration. Why? Because when the trade behaves differently, your expectations break, and that creates anger, fear, hesitation, revenge trading, overconfidence, confusion. The problem isn't the market. The problem is your expectation that the market should repeat itself. 3. The only constants you control are. Mark Douglas explains that you have 0 control over outcomes, but 100% control over these. Your risk, your entry rules, your exit rules, your position size, your emotional neutrality. When you accept this fully, you stop trying to force the market to behave like last time. You become calm, detached, consistent. 4. Thinking in probabilities is the only winning mindset. When you understand that every trade is unique, you naturally begin to think like a pro. Anything can happen. This trade is just one of many. I don't need this trade to win. This mindset frees you from fear of missing out, fear of being wrong, fear of losing, emotional attachment, prediction addiction. Douglas says repeating these truths until they become subconscious is what turns you into a high-probability trader. 5. You stop judging yourself trade by trade. Losing traders judge their value based on their last outcome. Win feel good, loss feel bad. Professionals think differently. A trade is not a test of intelligence. A trade is not a test of self-worth. A trade is not a prediction of the future. It's simply one event in a series of events. When you start thinking this way, your emotions no longer fly up and down with every candle. 6. The market owes you nothing. Sounds harsh, but it's liberating. The market doesn't care about your last loss, your analysis, your bias, your confidence, your strategy, your belief that it should reverse here. The market will do what it does, not what you want. Accepting the uniqueness of every trade removes all entitlement. And without entitlement, you trade with clarity. Final lesson of this principle. Stop expecting repeat results. Stop trying to predict. Stop attaching emotion to any single trade. Instead, follow your edge. Execute without hesitation. Accept random distribution of wins/losses. Think in probabilities. Stay emotionally neutral. Only then do you enter the zone where trading becomes effortless, calm, and consistent. 4. Probabilities over prediction. This is one of the core principles of trading in the zone. The idea that separates consistent, confident traders from emotional, losing traders. Mark Douglas explains that almost every trader enters the market with the wrong mindset. They want to predict what will happen next. They want certainty. They want to feel right about their analysis. They expect the market to obey their bias. But prediction thinking is why traders lose. Here's the truth. The market doesn't care about your analysis. The market does not know you exist. It is not controlled. It is not predictable. It is not logical. It is not personal. Every moment in the market is created by thousands or millions of traders acting on fear, greed, news, randomness, algorithms, liquidity needs, emotions. That is why no signal, indicator, or strategy can predict the future with 100% certainty. Once you accept this, you unlock true trading freedom. Trading is a game of odds, not certainty. Douglas teaches that a trader must think like a casino, not a gambler. A casino doesn't know the result of the next hand of blackjack, but they do know that over thousands of hands, they have an edge. They will win over time. Probabilities guarantee long-term success. Traders with the right mindset think exactly the same way. Every trade equals one event in a long series. You don't need to be right every time. You just need your edge to play out over many trades. You must detach emotionally from each individual outcome. Your job is not to know what will happen next. Your job is to execute your edge, manage risk, stay consistent. Let the probabilities work for you. Consistent traders think in samples, not individual trades. Losing traders think in terms of, my last trade lost, maybe the strategy is bad. Winning traders think in terms of, this is just one outcome in a series. My edge will show over 20 to 50 trades. This mindset completely removes fear, hesitation, revenge trading, emotional attachment, overtrading, overconfidence. Why? Because you stop judging the strategy by one event and start thinking like a statistician. Prediction destroys traders. Here's why. When you try to predict, you create expectations, emotional attachment, the need to be right, ego involvement, analysis paralysis, fear of missing out, fear of being wrong. These emotions lead to not taking valid trades, exiting too early, moving stop losses, increasing position sizes, taking random setups. Prediction equals emotional chaos. Probability thinking equals calm execution. The only things a trader controls. Douglas explains that traders do not control the outcome of a trade. They only control 1. Whether they take the trade. 2. Their risk per trade. 3. Their stop loss. 4. Their take profit. 5. Their consistency. 6. Their discipline. 7. Their emotional state. Everything else is random. Once you truly accept this, trading becomes peaceful, Emotionless, routine, consistent. Because now you're not trying to force certainty where it doesn't exist. The paradox of trading. When you stop trying to predict the market and start thinking in probabilities, you begin winning more often. Why? Because you finally trade your edge, follow your rules, trust the process, detach from results, stay consistent. Douglas says this is how traders enter the zone, a mental state where there's no fear, no stress, no hositastion, no doubt, no emotional pain, just pure execution. Summary of this principle. To master trading, you must understand. To master trading, you must understand. Every trade is random. Your next trade has nothing to do with your last trade. You don't need to be right. You need an edge. Think like a casino, not a gambler. Execute the edge repeatedly, and probabilities will reward you. This is the mindset of the top 1% of traders. The 5 core principles from Trading in the Zone by Mark Douglas. Explained clearly so you can use them in your trading right now. Your mind sabotages you. 1. The real battle in trading is psychological. Mark Douglas says the biggest enemy in trading is not the market, it's your own mind. Here's why. Your brain reacts to charts emotionally, not logically. When money is on the line, fear spikes. When you win, greed floods your system. When you lose, revenge trading takes over. When you hesitate, you miss opportunities. Douglas explains that successful traders aren't the smartest, they're the most emotionally stable. Professional traders know losses are natural, fear is normal, uncertainty is part of the game. You don't need to be right to make money. So the real skill becomes training your mind to stay calm, disciplined, and neutral no matter what the chart does. The internal battle is between your plan versus your emotions, your rules versus your impulses, your logic versus your fears. Winning the psychological game is what separates amateurs from professionals. 2. The market is neutral. You are not. The market has no emotions, no intentions, no opinions. It doesn't hate you or reward you. Only traders project meaning onto the market. When you lose, you think, the market tricked me. The market punished me. But Douglas makes one thing clear. The market doesn't know you exist. What really creates pain is your expectations, your attachment to outcomes, your personal beliefs, your fears from the past, your need to be right. 2 traders can look at the same chart. One sees opportunity. One sees danger. The difference? Their mental programming, not the market. The market is neutral. Your reaction is not. To trade like a pro, you must learn to detach emotionally and see the chart without your personal biases. 3. Every trade is unique. This is the most liberating concept in the entire book. Each trade is a completely new event because market participants change, volume changes, momentum shifts, news influences behavior, liquidity fluctuates. Even if the setup looks identical to a previous trade, the outcome is never guaranteed. This cuts 2 ways. Past wins don't guarantee future wins. Don't get overconfident. Don't expect the market to repeat itself perfectly. Past losses don't predict future losses. Don't fear taking new trades. Don't let trauma stop you. Douglas says, if every trade is unique, then every trade is independent of the last one. This frees you from emotional attachment, fear of repetition, overconfidence after a win, hesitation after a loss. Every trade is its own event. Just follow your plan and let probability do its job. 4. Probabilities over prediction. Most amateur traders try to predict where the market will go. Professionals don't. Pros think in probabilities, not predictions. They understand. No setup is 100%. There's always risk. A win is only one possible outcome. A loss doesn't mean the strategy is bad. A professional trader operates like a casino. Not every bet wins, but with consistency and discipline, the odds over time work in their favor. Douglas explains that a winning mindset is neutral, non-attached, focused on execution, focused on sample size, focused on the long game. Your job is not to be right. Your job is to execute high-probability trades repeatedly. If you think in predictions, you're emotional. If you think in probabilities, you're unstoppable. 5. Your mind sabotages you. This is the hardest truth in trading. Your mind is your saboteur because it naturally hates uncertainty, wants to avoid pain, wants instant results, wants to be right, wants comfort, fears losing money. This leads to the classic trader mistakes: cutting winners early, letting losers run, overtrading, hesitating, FOMO, revenge trading, changing the strategy mid-trade, ignoring stops, breaking rules. Douglas explains that your mind is programmed from childhood to avoid financial loss, avoid emotional pain, seek validation, seek certainty. Trading exposes all of these weaknesses immediately until you reprogram your mind to think like a professional trader. Your subconscious beliefs will sabotage your success. The solution? Build confidence through consistency. Trust your system. Accept risk fully. Release the need to be right. Kill emotional trading habits. Create a neutral trading mindset. When your mind stops interfering, your profitability skyrockets. The 5 core truths of trading. 1. The real battle in trading is psychological. Mark Douglas says trading isn't a war against the charts, the market, or other traders. It's a war against yourself. Most traders think, I just need the right strategy. I need a better indicator. I need the best signals. But the truth? Your strategy isn't the problem. Your emotions are. Inside every trader lives fear of losing, fear of being wrong, fear of missing out, fear of leaving money on the table, greed, impatience, self-doubt, hesitation, and these emotions create early exits, revenge trades, over-leveraging, chasing the market, ignoring your plan, sabotaging your own wins. Douglas says trading success is 80% psychology and 20% strategy. Because the charts don't hurt you, your reactions to them do. If you can control your mind, you can control your risk, and finally control your results. 2. The market is neutral. You're not. This is one of the deepest truths in trading. The market does not care about you, know you exist, attack you, reward you, punish you, play games with you. The market is just price movement. It goes where it wants, not where you want. But you come to the market with fear, bias, expectations, emotional baggage, hope, trauma from past trades, desperation to win. Your mind interprets every candle emotionally. But the market is 100% emotionless. 2 traders can see the same chart. One sees danger, the other sees opportunity. Same chart, different psychology. Douglas says, when you stop taking the market personally, you stop trading emotionally. That's when you start trading like a professional. 3. Every trade is unique. This principle breaks the biggest trading illusion. Because you saw the same double top before, the same support break, the same trend line touch, the same EMA crossover, does not mean the outcome will be the same. No 2 setups are identical. There are always new variables, new participants, new liquidity levels, new fundamentals, new sentiment, new volatility, new time frames at play. Your job is not to predict. Your job is to think in probabilities, not certainties. This frees you from fear of missing out, fear of losing, fear of being wrong. When you accept uncertainty, you stop trying to be right and start trying to trade well. 4. Probabilities over prediction. Winning traders don't predict the future. They play the odds. They think like casinos. The house doesn't know which hand wins. They don't know the outcome of each game. But over 1,000 hands, they know they will profit. Why? Because they work with probability, not emotion. Mark Douglas teaches traders to adopt the same mindset. You don't need to know what will happen next. You only need to know what's likely to happen next. And then you execute that edge. Without fear, without hesitation, without attachment, without hope. If you have a 55 to 60% probability edge and proper risk management, you become unstoppable. Not because you always win, but because you stay consistent despite losing. 5. Your mind sabotages you. This is where Douglas hits traders hardest. He explains that your mind creates behaviors that destroy your results, such as closing winners too fast, letting losers run, taking impulsive trades, seeking revenge after a loss, gambling after a win, ignoring your strategy, trying to make back money, refusing to take stops, trading based on fear, trading to feel alive, trading to escape real-life problems. Why does this happen? Because your mind is wired for survival, protection, avoidance of pain, and trading constantly creates uncertainty, risk, fear, exposure, emotional discomfort. So your brain fights your trading plan. It tries to keep you safe, even when that safety equals financial loss. Douglas says, until you rewire your beliefs, you will always sabotage your results, no matter what strategy you use. 6. The 5 core truths of trading. Mark Douglas ends with the 5 mental truths every trader must internalize to reach consistency. Truth 1. Anything can happen. You cannot control the market. You can only control your risk. Truth 2. You don't need to know what will happen next to make money. Your edge is your advantage, not your prediction ability. Truth 3. Every moment is unique. No se tu repeats perfectly. Stop expecting certainty. Truth 4. An edge is just a higher probability, not a guarantee. Losses are part of the game. You cannot avoid them, only manage them. Truth 5. You are responsible for every trade. Not the broker, not the signal provider, not the market, not the strategy. You. When you accept full responsibility, your trading transforms because you realize the only thing you must master is yourself. 7. Confidence without arrogance. Trading in the zone. Full breakdown of your 7 points. Confidence without arrogance. 1. The real battle in trading is psychological. Mark Douglas explains that trading is not a battle against the market, other traders, news, indicators. The real battle is inside your mind. Most traders think they need better strategies, better signals, better analysis, a holy grail indicator. But the truth is, you lose because of fear, hesitation, greed, revenge, and emotional bias. Examples of mental sabotage. Hesitating even when your system says enter. Closing trades too early because you're scared. Letting losses run because you hope things will reverse. Overtrading after a big loss. Getting euphoric after a win and making reckless mistakes. Douglas teaches that consistency is not a function of strategy. It is a function of mindset. To win, you must think in probabilities. Accept uncertainty. Detach emotionally. Stop taking losses personally. Every trade tests your mental discipline, not your technical skills. 2. The market is neutral. You are not. The market has no feelings, no memory, no intention, no direction meant for you. It doesn't care how much you need to win, how much you already lost, what you think should happen, what your analysis says, whether you prayed over the chart. The market is neutral energy moving based on collective orders. Meaning, you add meaning to the chart. You create expectations. You fear losses. You get attached to trades. The market is unbiased. You're biased. Douglas teaches that the biggest problem is that traders project their personal beliefs, emotions, and assumptions onto the market. If you think the market is dangerous, unfair, out to get you, you will trade defensively, emotionally, and inconsistently. To succeed, you must see the market as neutral, opportunity-based, unpredictable, non-personal. When you stop personalizing the market, you stop fighting it and start flowing with it. 3. Every trade is unique. Most traders believe, this setup looks like last time. This pattern always works. This indicator guarantees direction. Douglas destroys this mindset. He explains that no 2 trades will ever be identical because different traders are entering the market. Different emotions drive the candles. Different liquidity levels exist. The context is never the same. Even if the chart looks identical, the probability outcome is always fresh. This means you cannot expect certainty. You cannot assume past patterns must repeat. You cannot marry your bias. Expectations create pain. Understanding uniqueness creates emotional freedom. A winning trader thinks, This setup has a statistical edge, but anything can happen on this trade. This mindset removes fear and forces discipline. 4. Probabilities over prediction. Douglas teaches that prediction is a trap. Most losing traders want to predict direction, be right about the market, know where price is going. But the successful trader focuses on probabilities, not what will happen, but what is likely to happen. This mindset shift changes everything. The probability mindset allows you to stop forcing moves, stop taking trades personally, stop holding losing positions hoping for reversals, stop overanalyzing. Your job is simple. Identify edges. Execute edges. Let probabilities play out. When you think in probabilities, losing trades stop hurting. Winning trades stop making you overconfident. Your emotions become stable. Your confidence becomes consistent. This is how traders enter the zone. 5. Your mind sabotages you. Douglas explains how your subconscious mind becomes your worst enemy. You fear losing, fear missing out, fear being wrong, fear repeating past pain. Your brain protects you emotionally, not financially. This leads to self-sabotage, moving SL because you hope, closing early because you fear, revenge trading to prove something, over-leveraging to make back losses fast. Your mind is stuck in childhood conditioning, fear of pain, seeking certainty, seeking comfort, but trading requires embracing uncertainty, taking calculated risks, accepting small losses, emotional neutrality. Douglas shows that trading success requires reprogramming yourself, not the strategy. You must rebuild your beliefs, your expectations, your emotional responses, your internal dialogue. Only then can you trade without fear. 6. The 5 core truths of trading. Douglas gives 5 foundational truths every trader must master. Truth number 1. Anything can happen. No setup is 100%. No prediction is guaranteed. Accept uncertainty. Truth number 2. You don't need to know what will happen next to make money. Your edge wins over a series of trades, not every trade. Truth number 3. Wins and losses are randomly distributed. Even a 70% win rate system may give 5 losses in a row, 8 wins in a row. Mixed, unpredictable sequences. Accept streaks. Truth number 4. Your edge gives you a probability, not certainty. You win by sticking to your edge, avoiding emotional decisions, trusting the process. Truth number 5. Every trade is unique. Past outcomes do not control future outcomes. When these truths become beliefs, you enter the trading zone. Calm, emotionless, focused, consistent. 7. Confidence without arrogance. True trading confidence comes from understanding probabilities, mastering your system, accepting uncertainty, controlling emotions, not from winning streaks, lucky trades, inflated ego. Douglas warns that overconfidence is more dangerous than fear. Arrogant traders increase lot size, break rules, ignore stops, feel invincible, blow accounts after big wins. Confidence is, I trust my system and myself. Arrogance is, I can't lose. The successful trader develops calm confidence, zero ego, emotional discipline, realistic expectations. This is the mindset that produces long-term profitability. 9. The zone state. The zone is the peak mental state of trading. When you're in the zone, you feel detached. You feel calm. You are not scared. You are not greedy. You react instantly. You follow your plan automatically. You see the market clearly. You feel like time slows down. It's not luck. It is a mental condition created by mastering your beliefs, removing fear, accepting randomness, detaching from outcomes, trusting probabilities, executing without hesitation. In the zone, trading feels effortless. You stop fighting the market. You let your edge play out. You become a machine. This is the ultimate goal of all trading psychology. The goal, make trading boring, and why that's your superpower. Most traders come into the markets looking for excitement. Fast moves, big wins, adrenaline-pumping trades. But the real pros? Their trading is boring. predictable, repetitive, almost mechanical, and that's exactly why they make money. Let's break it down. 1. Boring trading equals consistent trading. Think of a professional pilot. He doesn't rely on instinct or emotion. He follows a checklist. Every single time. A profitable trader does the same. Your trading becomes boring when you trade. The same setups, at the same times, using the same rules, with the same stop-loss logic, with the same position sizing. This boring routine removes randomness, and removing randomness increases consistency. 2. Boring means you're no longer gambling. When trading feels exciting, it's usually because emotions are in control. The thrill of a big lot size, the fear of missing out, the hope of catching a reversal, the frustration after a loss. That's gambling energy. When trading becomes boring, you aren't impressed by wins. You aren't shaken by losses. You aren't tempted by setups outside your plan. You aren't chasing the market. You're simply executing a system. No drama, no adrenaline, just execution. 3. Boring trading protects your account. Exciting trading drains your account because it forces you into overtrading, revenge trading, improper risk, random entries, emotional exits. Boring trading, on the other hand, enforces patience, precision, risk discipline, statistical thinking. It's the slow, steady, nothing-to-prove approach that keeps your equity curve climbing. 4. Boring means you understand the market. Beginners think trading is about prediction. Professionals know it's about reading probability, managing uncertainty, following a tested edge. Trading becomes boring the moment you realize your job isn't to be right. It's to identify setups, execute them, manage your risk, move on. Whether a trade wins or loses, you no longer care emotionally because the outcome was just one event inside a long-term statistical series. 5. Boring is when you finally enter the zone. The zone is that mental state where you react instantly. You don't hesitate. You don't question your system. You feel detached from individual outcomes. You become like an athlete or musician who has mastered their craft. Trading becomes boring because it becomes flow. 6. If it's boring, it's working. Here's the paradox of trading. The traders who make the most money experience the least excitement. Why? Because they don't chase, don't guess, don't force trades, don't feel the need to prove anything, don't break their rules. They follow process, and process creates profit. Final thought. If you want trading to feel exciting, you'll pay the market for entertainment. If you want trading to feel boring, you'll get paid by the market for discipline. The goal is not excitement. The goal is repeatable, emotion-free execution. The goal is boredom. Subscribe, let's grow. More books loading.